FA1 Part B. Recording and Accounting for Cash Transactions. Chapter 5. Receiving and Checking Money. The topics that this presentation will cover are 1. Control over receipts. 2. Remittance advices. 3. Receipts given to customers. 4. Various ways in which customers pay. 5. Cash, physical security considerations. 6. Checks. 7. Receipt of check payments. 8. Receipt of card payments. 9. EFT/POS. 10. Other receipts. 1. Receipts need to be well controlled, in order to ensure good cash flow. There are 3 key features of the control of receipts. They are: banking, the receipts need to be banked promptly. Security, the loss of receipts by theft or accident needs to be prevented. Documentation, the records of receipts must be complete. 2. Trade customers usually send a remittance advice with their payments. The remittance advice shows which invoices the payment covers. Some businesses send a detachable remittance advice, with the statements they send to customers. This is the procedure that is usually followed when comparing a receipt with a remittance advice. Step 1. Check the amounts on the remittance advice, and that they add up to the total. Step 2. Compare the total with the amount of the receipt. Step 3. If there is any differences between the two amounts, mark on remittance advice the amount received, and calculate the difference. Step 4. Send the check to be banked and record the receipt. Step 5. Send the marked remittance advice to the receivable ledger department, where they will deal with individual customers. If there are any differences, they will contact the customer and resolve any problems. 3. Receipts are documents that are given by the seller to the buyer. It is given on exchange of goods or payment. Cash registers, or tills, are mainly used by retail shops, where money is handed over directly, when the transaction takes place. Most businesses use an electronic cash register, which often uses barcode readers to register the information of the items sold. Cash registers are a part of control over calculating and giving change to customers. There are a number of potential errors that can happen when giving change. They are mentioned below, along with their effect, and what can help control the error. The potential error in calculating and giving too little change will lead to customer annoyance, which might lead to a loss of goodwill, but the error can be controlled by the cash register. The potential error in calculating and giving too much change will lead to a loss of money by the business, but the error can be controlled by the cash register. The potential error in physically taking the incorrect amount from the till and giving as change will lead to either customer annoyance, which might lead to loss of goodwill, or a loss of money by the business, but this error can be controlled by making sure that staff are careful, well-trained, and have reasonable mathematics skill. A till receipt will show some of, or all of the following: the name of the seller, the date of the transaction, the price of each of the items bought, the total value of the items bought, the sales tax, VAT, registration number of the seller, if the seller is a VAT vendor, the amount given, by the customer, the amount given, to the customer as change, the name of the assistant or cashier, and the till number. If an electronic cash register is not used, then receipts that are handwritten or typed are used. The same information that appears on an electronic till slip should appear on the written receipt. It is easier to put more detailed information about the items being sold on a written receipt. Some of the goods sold will have a unique registration or code number. This is normally used for goods sold under guarantee. The supplier uses it to make sure that the item that is brought to him, to be repaired or replaced, came from him, and is not an item bought from somewhere else. When a customer pays by a means that is not cash, they will receive evidence of payment that is not a receipt. The methods of payment with their evidences are listed in the following table. When paying by credit card, the evidence of payment is the copy of the signed credit card voucher that the customer receives, and there will be a record on the customer's monthly credit card statement. When paying by debit card, the evidence of payment is the same as a credit card, a signed debit voucher and an entry on the bank statement. When paying by check, the evidence of payment will appear on the customer's bank statement. When paying by banker's draft or postal order, the evidence of the payment is that the issuing bank or post office will hold records of the items issued. When trading on credit, it is unusual to issue a receipt. The only acknowledgement of payment that a customer receives is a cash receipt, deducted from his balance outstanding on his statement of account. 4. There are various ways in which a business will receive payment. The main ways are cash, card, EFT, check. The type of receipt that a business receives will depend on the type of business, whether it is a retail or trading business, and the type of sale, if it is a credit or cash sale. The pattern of receipts for the two different types of businesses are different. A retail business will have a steady flow of receipts, maybe a bit more on weekends and public holidays. A trading business will have the bulk of its receipts at the end of the month. Customers may be given different due dates, in order to spread the receipts more evenly over time. 5. Holding cash can create problems. The problems are forgery and theft. Forgery of notes and coins. Theft by staff or by others. These are security procedures that can be followed to reduce the chance of theft of cash in a business. To reduce the theft by staff, the business needs to be careful about the people they employ, their references should be checked and they should be monitored for their first few months of employment. The cash register needs to be secure, with keys to operate it. Different staff members should have separate keys so that the register can record the different staff members who do sales. This will show which staff members are recording the sales and who is pocketing the cash and not recording the sales. Safes need to be out of view, the number of keys for the safe need to be kept at a minimal, and access to the safes needs to be restricted. Some businesses have protective glass, banded screen, between the cashier and the customers, so that the cashier can be safe, and to protect against theft. Some businesses use a strong box, a locked box under the tills, by the cash registers. The cashier can put money into the strong box but money can't be taken out by the cashier or any customers. Large companies can employ security guards, either internal security staff to accompany the staff who bank the cash, or use an external security firm who will come and collect the cash and take it straight to the bank. Night safes are used when a business finds it impossible to bank their money during regular banking hours. A night safe is a deposit slot on the outside of a bank, allowing money to be deposited into the bank's safe, outside of bank's opening hours. Cash should be taken to the bank regularly and on a frequent basis, so it minimizes the amount of cash that is on the business's premises. The staff that does the banking and the time that they go should be varied. Cash should not be sent through the post because there is no way to trace it if it is stolen or lost. 6. A check is an unconditional order in writing, addressed and signed by a person to a bank, requiring the bank to pay on demand a certain sum of money to a specific person, or bearer. A check can be sent through the post, because if the check gets lost, payment can be stopped on the check. The check can also be traced if deposited by an unauthorized person. Please note that checks are no longer accepted as a form of payment. This is due to the increase in forgery, and the increase in the use of credit and debit cards and electronic fund transfers, EFT. 7. This is the procedure to check a check that is received as payment. Step 1. Examine the face of the check and ensure that the details are correct. The date, the payee's name, the amount, in both words and figures. Step 2. Make sure the check is signed by the drawer. 8. Plastic cards are primarily used by individuals, although companies may give a card to certain staff members to pay for expenses. For an example of a plastic card and a description of the various parts, see page 121 of your interactive study guide. There are two types of plastic cards: credit cards and debit cards. A credit card payment involves 3 transactions and 3 parties, as seen below. Transaction 1. The purchase of goods. The card holder obtains goods without payment, now. Transaction 2. The payment of the supplier. The supplier recovers the price of goods or service less commission on the card. Transaction 3. The payment of the card. The card holder receives a statement. He may either settle it now, or pay with interest later. Card issuers normally charge a membership fee as well as interest to card holders. Suppliers are allowed to charge more for goods bought by credit card. Because if the supplier makes a credit card sale, he will have to pay the card issuer a percentage on the sale. There are certain security checks that should be done before accepting a credit card. For these checks, see the table on page 122 and 123 of your interactive text study guide. When making a payment using a debit card, a customer will sign a voucher. It is then processed through either the credit card system or EFT POS. The amount of the payment is deducted directly off the customer's bank account. 9. EFT POS means electronic funds transfer at point of sale. With EFT POS, transactions are recorded immediately, onto the customer's bank account, or credit card statement, so the funds are automatically transferred from the customer bank account to the retail business bank account at the time of the purchase. These are the advantages of an EFT POS terminal. There are no physical vouchers to be banked. The terminal automatically phones for authorization. The payment is accepted by the card company for processing and payment to the retailer's bank account. The terminal prints out a 2-part receipt. On the receipt the following details should be printed: the details of the card, the transaction amount, and the supplier details. The customer will get the top copy of the receipt. Even though the terminal will do most of the security checks, you should still do all security checks for the card. Computers can still make mistakes. The transaction can be reported by the terminal as not authorized, because either the customer has exceeded his credit limit, or the card has been reported as stolen. When you receive the terminal, it comes with a training card to train staff, and a supervisor card, which is used to do certain transactions, for control purposes, like authorizing refunds, and printing out reports. Other types of transactions that can be done with an EFT POS terminal are mail order sales, where the card number can be keyed in manually, reversals, which are returns, and the terminal can also make duplicate receipts. The reports that can be requested from the EFT POS terminal are: a list of transactions processed through the terminal for each card issuer, and end-of-day procedures, totaling all the receipts for the day. 10. There are other types of receipts that are specialized and used by certain businesses. They are: a banker's draft. A banker's draft is available from banks at a fee, they can't be dishonored. A postal order. A postal order is a written order for the payment of a sum of money, to a named payee, obtainable and payable at a post office. The post office will normally charge a fee for this service. Standing order and direct debit are regular payments. With a standing order, the amount can only be changed by the payer, but with a direct debit, the amount can be changed by the receiver at will. Stop the lecture. Answer the question on page 125 and 126 of your interactive text study guide. This is the end of Chapter 5. What will follow next is the quick quiz. After the quick quiz, do the online questions for Part B, Chapter 5. It will be good practice because the online questions are set out like the exam that you do at the end of the course. They will also test your knowledge of this chapter. Quick quiz. Question 1. Control over cash receipts will concentrate on which 3 key areas? Question 2. What is the function of a remittance advice? Question 3. Why should cash be banked regularly? Question 4. Should cash be sent through the post in an emergency? Question 5. Is it safe to send a check through the post? Question 6. What does EFTPOS stand for? Question 7. A banker's draft cannot be dishonored. True or false? After doing the quick quiz, do the online questions for Part B, Chapter 5. Do the questions, until you achieve 80%. Replay the lecture as needed.